ready? We are live and ready, Mr. Mayor.
Gavel that. Okay, we'll call this work session to order. This is a work session Monday, September 13th at 5 p.m. And I guess that's all we need for now. Get started. Turn it over to the city manager.
Thank you, Mayor. And I'm going to go ahead and share my screen for a PowerPoint presentation with the council. So tonight's work session is the discussion on general fund and special revenue fund balances and future consideration regarding reserve policies. And I'd like to add that our city finance officer, Jan Yeager, is on the line too. If council has specific questions regarding our budget, she is available for comment too. So council has heard me bring up fund balance before. Our FY22 budget features fund balances for our major special revenue funds. And I'd like to share a couple of definitions along with a video that we'll pull up in just a second. But according to the Kenai Peninsula Borough in a presentation that their assembly considered when developing fund balance by definition does not equal cash, nor is it the difference between revenue and expenditures. It is the cumulative difference of all revenues and expenditures from the government's creation. It can also be considered to be the difference between fund assets and fund liabilities and can be known as fund equity or net position. So basically, we imagine the general fund, the city of Seldovia is created or incorporated, and from the start of the city of Seldovia until now, that is the fund balance. And you could do that for the special revenue or for the general fund and all of our special revenue funds. And there's multiple definitions for fund balances, and there's many different types of fund balances. So another definition for council to consider, and this is from the GISB, they help set a lot of the accounting standards that governmental agencies follow. The fund balance in any given fund is essentially what is left over after the fund's assets have been used to meet its liabilities. And so an equation that you'll hear a lot of accountants talk about is assets minus liabilities equals fund balance. Now, in your budget documents for all of the major special funds, the general fund and the 5 other special revenue funds, at the very end, you're going to see a fund balance, an estimated fund balance for those accounts. And that's an unrestricted fund balance where you're just looking at revenues, which are your assets, minus your liabilities, which are expenses. And so let's take the water special revenue fund. We know we're going to make a certain amount of revenue every year because we have a certain amount of customers. And then we know we have a certain amount of expenses. How much do the chemicals cost? How much does the electricity cost? How much does the audit or the insurance cost to make sure that we're operating to municipal standards? So we take those expenses, we minus that from our revenue, and that's our unrestricted fund balance that's included in our budget document. Now, I found a video developed by a school district, I believe it's in Florida, that I asked Radzi, our IT manager, to pull up for council to see tonight to give another perspective of fund balance. You have to hit that blue button, Radzi, that says share. And then just make sure the volume's turned on the video. And then let's make it really big. The far right, you'll see a little box there on the video itself. There you go, full screen. You should have a fund balance in order to accommodate unforeseen expenses that may occur for any reason throughout the fiscal year. I didn't realize my mic was on, not on, I'm sorry. So I was just repeating what was on the slide. Why have a fund balance? That video that we saw from that Florida school district talked about, for example, if there's an economic downturn, but you need to maintain operating expenses, a fund balance helps offset those costs. It's not supposed to be used on a recurring basis, but it's for one-time emergencies or one-time big expenses. And so thinking through why it's important for Seldovia, uncertainty in or lack of state funding. Right now, we balance our budget with the community assistance program funds. The state, almost every single year for at least the past 5 years, has talked about cutting or removing that program completely. If that were to happen, we would have a $65,000 hole in our current budget. We took 10,000 of that to help with jackal-off maintenance through a capital project, so that wouldn't impact our operating budget completely, but all the previous years we've used it for things like insurance and audit expenses, and my computer just shut down because I didn't have it plugged in. I'm sorry.
While you're plugging in, Rachel, so to clarify, the assets minus the liabilities equals your fund balance, but assets, I mean, comparing that to revenue minus expenditures equals, so they're different because, I mean, what I'm hearing is they're different, right? So
Correct.
assets are not only your revenue, but also other things that represent money for the city. That's how
Correct.
that's right.
Correct.
Okay.
And an example of liabilities that's not typically expenses are paid time off for employees.
Right.
The city of Seldovia has a limit where you can't accrue more than 240 hours as an employee. And I'm assuming the city has that in place because 240 hours, if an employee were to leave, that's a significant amount of money to hit the city at once, and that's owed to the employee. And Homer, I think you can accrue up to 700 hours of paid time off, but it's a larger organization. So that's another example of a liability for the city. So now I have to log back into Zoom. 1 second here. And then Radzi, could you promote me to panelist when I show up there? Okay, thanks for your patience. I'm sorry that my computer died there. So another example of why to have balance. Also have contingencies. So there's unanticipated emergencies. You could have an epidemic, you could have floods, you could have fires. I mean, there's other types of catastrophes. You could have periodic large expenditures. So the city of Seldovia needed a loader at one point, and I included that ordinance in one of your previous packets. Something had happened to our loader, and we spent $220,000 in one go because we needed a new loader. That's what hopefully won't happen with the grader, where we have an expense that hits us and we're left with a desperate situation of we just need to buy something now. And that funding for the loader came out of AMLIP. $220,000 hit, that's a significant amount for the city of Seldovia. So having a fund balance, you could offset a large expense like that. So here's another few examples of why you have a fund balance. An adequately maintained fund balance fosters stability for the current and future generations of Seldovians. So the way that I like to think about this is the city of Seldovia, we're an organization where we're here to serve the best interest of the public, current generations, and the benefits that current generations receive. We should be able to provide that, if not more, to future generations. But if we don't plan and do financial management in a way that ensures sustainability, the resources that current generations of Seldovians are getting today, we will not be able to provide to future generations in the coming years. In addition to having a fund balance that can foster stability, it helps provide predictability and certainty in the face of significant economic events. It's a tool that helps Seldovia weather a financial storm. By having a sustainable fund balance in place, it spreads out major expenses over time versus having to come up with revenue in a different manner that significantly impacts the current generations of Seldovians. So what I mean by that is, since the city doesn't have sufficient reserves, we have to do things like look at property tax increases, sales tax increases, because how else do we generate revenue? If you had adequate fund balances, you could delay doing a sales tax increase. You could delay doing a property tax increase and instead rely on fund balance, knowing that you're going to build it back up again. Like, let's say for the pandemic, just as an example, and this is not a true example, it reduced our sales tax revenue by $50,000. And we used all of the whole sales tax revenue estimate to balance our budget. We could say, well, we're going to make up that difference by pulling from our fund balance. We know that's not a good move because our fund balance is in the most sustainable place, but we'll be able to replenish that in the coming years rather than having to do something like increase sales tax or property tax. And again, to reiterate the point, a sustainable fund balance ensures the services Seldovians receive today are services future Seldovians can also receive. Very important. An example of that I can come up with is I was told in the past the city of Seldovia used to apply calcium chloride to the roads to prevent dust in the summers and do dust control. We do not budget for that anymore. We cannot afford to have currently that service without taking away another service in order to provide dust control for roads, unless council says, you know, we want to do something like reduce X, Y, and Z. So that's a change in service from what I've been told the city was able to offer in the past. And here's the disclaimer. The misuse of fund balances could result in financial disaster. Fund balances should never be used as a source to finance ongoing expenses. They are to be used for one-time unforeseen expenditures that were not accommodated in the budget. So now we're faced with the question of how much of a fund balance should be maintained. And you had some materials in your packet about this. The Government Finance Officers Association says that at least for the general fund, you should have no less than 2 months of revenue or expenditure operating fund balance available. Sometimes you need more. So the municipal dock, for example, I can't remember the figure off the top of my head, but I want to say it's somewhere to the tune of, it has a fund balance right now of $150,000. Should the city take that fund balance and apply it somewhere else? The council certainly could. But I would advise or caution the council in doing that, because let's just say a boat hits the dock and takes out one of the pilings. How much would something like that cost? So it's important when you look at each fund, GFOA says you need at least 2 months of either operating revenues or operating expenditures, but maybe that fund needs more than 2 months. So this information too is provided by the Kenai Peninsula Borough. So what do other cities do as far as fund balance policies? And this is in your work session packet. So I'd like to ask the council to go to pages 3 through 5 in your work session packet. And I'll pull it up here on the screen. So let's just look at page 3, and I'll try to make this bigger on the screen in your packet. So the Kenai Peninsula Borough, they break it down by funds with expenditure levels and then percentages. So they say funds that have an expenditure level in excess of 10 million, we need to make sure that we have 10 to 15% of fund balance in that fund, because that fund is so big. The expenditures demanded in that fund are so large that we need to make sure we have at least $1 million in case something were to happen. We don't have the revenue to offset those expenses. So again, that's just the example of the Kenai Peninsula Borough. Homer says 4 months revenue. We need to make sure that the general fund at least has 4 months of revenue available in the off chance there's an emergency, something happens, and we're not getting the revenue we need to offset a certain expense. Juneau says 2 months of annual operating revenues. Kenai says 4 months of general fund expenditures. So you can just see the variability from municipalities across the state of Alaska and determining what a sustainable fund balance is. So that's looking at what other cities do in terms of fund balance. So what does this mean for Seldovia? So if we look at our FY22 budget document, council's provided an estimated fund balance for the general fund as well as the 5 major special revenue funds. And it looks at expense and revenue flows alone. Our audit document, and this goes to Councilmember Rojas's comment, that is a way more elaborate ode to governmental financing, where it looks at all of our liabilities, all of our assets. So for example, all of our assets are valued at 22 million. They've depreciated by almost half. So now we have about $11 million worth of assets, which is in my mind a wake-up call that our city facilities and public infrastructure is aging, and we need to do something about it because it's over time devaluing. So it just is another method of showing the organization that everything is getting old. So that's a type of a liability, a depreciation of an asset. So if you look at least on the budget document, and I pulled out the example for the general fund, which is on page 14 of your budget, it gives you an audited ending fund balance for the years where I had that information. So your budget document has FY 19, 20, 21, and 22. And then it gives you an estimated fund balance where I just looked at the revenues, subtracted the expenditures, and you'll see that I'm predicting for the general fund, based on the information we had at the time, that our fund balance is going to go down by over $8,000. So that's an example in your budget document for fund balance. Now, to look at the fund specifically, let's go to pages 6 and 7 in your work session packet. And I'll pull that up here on the screen. So GFOA standards said that you should have at least 2 months of either revenues or expenditures for your general fund. And I just applied that concept to all the funds. So we took a 5-year average of the operating expenses, and then also a 5-year average of the operating revenues for the 6 major funds. So let's just look at general fund, for example. The 5-year average for the general fund is $718,000. That's how much we're spending. If we were to just look at what an average is by month, so dividing that by 12, we need about $60,000 a month to operate just the general fund alone. If we were to times that by 2 to give us the 2 months total, we need a $120,000 fund balance. Well, we have 145,000. So it's great news. And I just took that same concept and applied it to all of the funds, looking at expenses versus revenue. You'll see the harbor is in red because it's in a deficit. This is the 8th year the harbor has been in a deficit. We're at a negative $155,000 deficit for our harbor / Jackaloff, because Jackaloff gets funded out of the harbor. But everyone else is doing great. And that's for 2 months. Well, what if we apply the concept of 4 months? Because some cities have a 4-month fund balance. Well, now we start to see our general fund doesn't meet the 4-month total. The harbor continues to not do that. And our municipal dock doesn't meet the fund balance total. And again, it's important for council to remember that is 2 months of operating expenses or revenues, is that enough to operate the city? Or does that fund need more? Like if we had a major failure of a filter at our water treatment plant, how much would something like that cost? Is a fund balance of $123,000 sufficient to help offset a one-time major expense of a critical failure of equipment at the water treatment plant? So I'm just putting that consideration before council. So that's where you're seeing the information applying what the GFOA and other cities look at when considering what should our target level be for expenses and revenues for our respective city. So I'm almost done here. Thank you so much for your patience, and then we'll get to questions in just a second. Where do we go from here? So this is a work session, and I'm looking for input from council. But here's just a suggestion for council's consideration. The city develops a fund balance reserve policy for each of the 6 major funds. And there's an example policy document that's in your work session packet. It's on page 12. This policy is then put into the budget. So that way, future city managers and future council members know, well, our fund balance target has to be this dollar amount. And then the city follows the policy. You determine if the expenses or revenues need to be adjusted in order to meet those target funds. And then if the city has to use the fund balance, so let's say the sales tax proposition fails and our grader fails this year, and we're faced with an emergency or critical situation, perhaps the city taps into the fund balance, withdraws a significant amount, or uses AMLIP or the Seldovia Permanent Fund, and then we have to pay those funds back. So then we have to figure out how we pay that expense back. But anyways, this is just a suggestion for where the city can go with this information, and what we're overall doing is trying to develop a sustainable vision for the city. So that way future generations of Seldovians are guaranteed the same level of service, at least that current generations of Seldovians are. And with that, I welcome any questions for the council, and thank you for listening.
Any questions from council?
Mr. Mayor,
Go ahead.
I guess I would have to, after looking this over, actually surprised that we actually have fund balances in several of our accounts. That's great news to see and hear, surprising, actually. So the fund balances that we've got in those accounts, the general fund, which is the only one that's in bad shape, is the harbor and Jackaloff. is because our expenses have been less than, or our assets are more in those areas, in those departments. That's what's given us this fund balance, and it's accrued over years. Is that right or wrong?
Basically, so I would call this more the unrestricted fund balance, where we're just looking at actual monies and actual expenditures. If we were to look at our audit document, you would actually see that our general fund is in a significant deficit of almost $500,000 because,
Right.
and this is where the use of the permanent fund has come in. Staff have been reporting to council, and in our FY20 audit document, we say that the Seldovia permanent fund should be $570,144. When you look at our audit document, it says the permanent fund is only $153,000. Why is that? It's because the general fund is in a significant deficit, whatever that difference is, somewhere between $400,000 and $500,000, based on doing things like depreciation of our assets, because that has to be offset somehow. So the auditors have been using our permanent fund to balance out our general fund. And if that permanent fund wasn't used like that, our general fund would be in a deficit right now as well.
Okay.
But yes, you got it. Since the inception of the funds through time, that's essentially what the fund balance is. And for this, because the city of Seldovia, as far as I know, has not developed any other policies about unrestricted fund balance, committed fund balance, non-committed fund balance. There's 5 different types because we don't have policies on that. I'm just reviewing our expenses and revenues and treating that as unrestricted fund balance from the inception of the fund through time.
Okay, thanks.
I have a comment.
Go ahead, Bobby.
Okay, first off, my head's about ready to explode with this budget stuff. That being said, I think if we do not have this reserve policy in place, I think obviously it's a good idea for us to do that as a reminder for all of us that we need to have some reserves on hand and to make sure we review that periodically to make sure we do have that if at all possible. I mean, I'm in agreement with Vivian. I'm surprised we have that now. But I'm sure we don't always have it. So I think a policy like that is important. Thanks.
Mr. Mayor,
Yep, go ahead, George.
unless I misunderstand this, we do not have those balances. We've commingled our permanent fund with our general fund, and we're drawing out of that to, as you say, prop up our general fund. So in actuality, we do not have those reserves.
Correct. Specifically for the general fund, if you look at our audit document, that's correct. If we don't account for the audit document, which looks for things like depreciation of our assets, if we just put that aside and that accounting world aside and just look at revenues and expenses, our general fund is in the positive. But it's gone down.
Well, if we intend to continue providing the services we are now, it looks like we need some more revenue. I don't see how we can avoid the sales tax increase without really crashing here. Seem to be walking right on the edge. We're not desperate yet, but the idea of having these reserves is excellent. We definitely need to have them, but right now it's more like we need them than have them. I don't think we have much choice in most of these things. What are we going to do about the harbor fund, for example? I don't see dragging more money out of the permanent fund to try to bail that thing out, but I don't know what the answer is.
And fund balance is not supposed to be used for operating expenses. So it's either the city figures out how to generate more revenue, or the city figures out how to cut expenses in order to get us on a more fiscally conservative and sustainable track.
Thanks, George. Anyone else?
Yes, Mr. Mayor.
Yep, go ahead, John.
Yeah, I think this is a good idea. Um, it's mind-boggling to me why it wasn't done 30 years ago or 40 years ago. And for making more money in the city, we got to get away from driving people away and encourage more business and more people here. You get more business, you get more jobs, more people, more property. But this is something we should have been doing years ago. So I'm all for it.
Mayor, may
Yep, go ahead.
I? Can I get feedback from the council and what targets you would like to set? So would you like to stick with GFOA right for now, knowing that that might not actually be the most appropriate for that fund? Do you want to look at, like so council has an inventory of our capital assets in your budget. Do you want me to come up with dollar amounts and like lifespan of those things and look at how long they're going to last? And if the fund balance should try to accommodate failure of major critical equipment? I would appreciate council's guidance on, do you want 4 months? Do you want 2 months? Do you want variable? What would the council like?
Mr. Mayor,
Yeah, go ahead, John.
me personally, I would go with 4 months straight across the board, shoot for that goal. You won't hit it in a year, but take a little while to get it up there. Thank you.
Mr. Mayor,
Yep, go ahead, George.
excellent idea, but I think it attached to that should be a plan on how we get there and a time frame. I was saying that we want a 4-month reserve is excellent, but it's a pipe dream right at this point. So let's see how do we accomplish that and attach that as part of our actions as far as trying to achieve this.
Mr. Mayor, if I may, you done, George? All right.
Go ahead, Vivian.
Yeah, I would say that as Rachel asked us, I think we need to do an evaluation of what we do have in-house. What are we worth and what are we lacking and what's going to come up so we know to anticipate where we may find ourselves. So I think that evaluation that you asked about, what do you want us, what do we want you to do? Evaluate what do we have for assets and liabilities and seeing what kind of money are we looking at that we may need. These are basically, if you take it in short, these are little savings accounts that we put away in case disaster hits us. We have something that we can rely on because that permanent fund, which is a whole nother discussion, is going to disappear if we rely on it. And that's not really what it was for. I agree with George about we need to come up with a plan. How do we actually go through if we're actually shooting for the 4 months? How are we going to get there? Is it possible for us to get there and how long? So I guess if you're asking, Rachel, how long would it take to accomplish the 2 months? How long would it take us to accomplish 4 months? Which is feasible for us to get to. I think this is a great documentation brought to us. And it's kind of a hard thing for me to try to figure out. We look at this in one set of numbers, then we listen to auditors and it's a whole nother picture. It's always hard for me to separate those two in some sort of realm, but I think we all need to recognize the problem that we have going is that Seldovia is getting old. Our buildings are old, our assets are old, and until we start accruing new stuff, that's kind of our picture because we don't have newer buildings and we don't have newer equipment. So those things don't come into our positive, but if that's helpful at all, I guess that's kind of where I'm kind of stumbling through this. Thank you, Mr. Mayor.
Thank you, Vivian. Yeah, I guess I just have one comment. I mean, to break this down simplistically, when you look at what we're used to seeing, when we look at all of our funds, right? It's no different than small business. You've got two main things that you look at. You look at your profit and loss and you look at your balance sheet. Well, most of us can't figure out our balance sheet until our accountant is done doing all of the financial world, which is what we have here, the same thing. That's where they manipulate it, the balances after they take a look at all the depreciation, figure in all of your IRS allowances, et cetera. The profit and loss, or when we look at our basic our basic funds, and when we look and we're going through budgeting, it's revenue versus expenses, right? Simplest, cash on hand. So for us, that's what most of us understand. That's what I understand. I'm like, how much money do I have? It's cash in the bank, right? So this is where this gets cumbersome, trying to, for anyone trying to understand when we say we have fund balance, but then we don't have cash. I get it. I mean, a lot of this is since inception on all of these funds. That's where this gets twisted around. And I know it gets a little confusing for me, and I think it gets confusing for everybody in that sense. So, but I think just generally what I'm hearing is, it's obviously a fiscally responsible thing to do, to have a fund balance in code, have a plan in code that we do there, how we get there. The discussion here is it easy to go back and do some reverse forensics to see how long, did it take us 20 years, 25 years? How long did it take us to get, to our 2-month threshold? When we talk about going to 4 months, is that going to take us another 20 years, or is that something that can happen, within just a couple of years? Is that actually attainable? I think we probably need to know that, but those are answers we have to find out to see the reality of it. But I think generally, from what I'm hearing, it's the right thing to do here.
Yes, definitely. And I'd also like to draw council's attention to the fact that currently our harbor is the only fund that is in an actual deficit. And the reason why that wasn't, I think, an alarm for council when you look at our audit document, it's because that fund balance gets balanced with everything else. And so because we're in the positives in all of our other accounts, the harbor's deficit of minus 150,000 gets covered up by everything else. So it doesn't come out as a concern or as an alarm when you first look at it. And I quickly, and I've shared this with council in the past, and I'm gonna have another work session with you guys where we go over it more in depth, but I have a quick demonstration, and we can just look really quickly at the harbor here, and we can look at what the fund balance has been doing. Let me just share one more slide before, in case council has any other additional questions after this slide. So this is the boat harbor special fund. The blue line that you see here is the fund balance. And you can see that it's in a negative $800,000 deficit. And that's, I'm assuming, as a result of the harbor capital improvements that we did starting in 2014. There's a bunch of different colored bar graphs here, but basically, if you look at the blue bar, that's what we said the expenses were going to be. If you look at the orange bar, that's what the expenses actually were. You can see starting in 2012, how we overspent from 2012 through 2020 in the harbor. So that's pulling the fund balance down. And then you would hope that you could see the same problem with revenue. So gray is the revenue that we forecasted we were going to have. Yellow is the actual revenue we received. Starting in 2012, we made a little bit more revenue than we thought, but you can see in the other years, the revenue that we generated was not sufficient enough to offset the expenses. So this is just a snapshot of the harbor. And you can see that in 2010, the fund balance for the harbor, let's call that 260,000, 270,000. And in 2022, we're at about ending fund balance. Sorry, that should be negative, an ending fund balance of 153. Oh, sorry, we're looking at the general fund. That's why that doesn't make sense. Here, I'm sorry. Here's the harbor. This is actually more compelling. Oops.
We're relying on you. I can't see the print.
Sorry, guys. This is the harbor. This is the correct imagery for the harbor. So you can see the harbor. 2012 was especially stark, where our budgeted expenses in blue. It's Vivian, I don't know if you can see my mouse, but right here, our budgeted expenses for the harbor versus what we actually spent. And then our revenues, I mean, it's pretty stark, and you can see the fund balance for the harbor just going down so that it's now the negative 150 something thousand for that fund. So this is why it's important to set targets, because had the city looked at this starting in 2013, we could have said, wait a second, what's going on here? Why is our fund balance for the harbor going down? We have the specific target. We can't incur that expense that way because it's going to impact the harbor in this negative way. So we'll have more discussions about this in the future, but I thought this would be a good visual for council to see for 10 years what's happened to the fund balance. What happens to budgeted expenses versus actual, budgeted revenue versus actual revenue, and how does that impact that specific fund?
Real quick, before we get too much farther with council here, I want to make sure we get an opportunity for anyone from the public that has comments or questions on this as well. We've got a few people online, and then Chris, did you have any questions or comments tonight on this subject? No. Okay, any Radzi, any hands? Anyone online wish to have a question or comment? Nothing, okay. Okay, yeah, we'll bring it back to council.
Mr. Mayor,
Yeah, go ahead, John, or George, sorry.
we've nibbled around the edge of this problem a couple of times in the past, but how does it come to happen that we spend more than we budgeted? What, don't we have some system of constant monitoring and notification or whatever to put our pocketbook back in our pocket at some point in a program? How do we get control over overspending?
It's an excellent question through the mayor. Council member Nathan, in a previous council packet, I shared with the council an example of how I've modified, for example, the purchase order form. And our finance officer has put this into effect with all of the purchase requests that I sign, where there's two specific statements. Is there budget authority to spend this? And is there enough remaining? So now she checks those off for me. Before, we did not have that as a double check. So now every time I sign something, she is reassuring me that we have money in that account to make that happen. So that's an internal control that I've put into place. I can't explain what happened in the past. I'm assuming, I mean, there could be a variety of things, emergencies such as the back or the loader failing and having to figure out how do we come up with $220,000 on the spot. Lawsuits, those are unanticipated expenses when you don't know when that's going to happen. I mean, all sorts of things happen, especially if you're not regularly taking care of your public facilities and equipment. If you're not doing that and maintaining them, chances are they're going to fail. So I can't explain what happened in the past, but that's what I've been seeing as a trend, and a trend I'm hoping council and myself can change from this fiscal year forward.
That's perfect. I certainly wouldn't expect you to try to explain what happened in the past, but the fact that we do have a system in place now that should prevent this sort of thing from happening in the future is essential. Thank you.
Go ahead, John.
Mr. Mayor, part of the problem with the harbor in those years was, I was here for those. We got a new main float, and for some strange reason, everybody turned down having water and stuff built into the float and delivered that way. Instead, they chose to just get the float, and then a year later buy all the material and the stuff and tear the float apart and install the water, which cost more. And then we went to, I believe, halogen lights a few years back, and those should be paying for themselves, just in the difference in electrical cost. I haven't seen what the difference is yet, but it would be nice if they're making $1,000 or $2,000 a year back from what the electrical bill was for just the lighting on the city harbor. So that's one of the things that drove the cost of the harbor up, was getting a plain dock and then buying the material and installing it after the dock is put in place. when it could have been purchased with the system in it for roughly the same price. Well, we would have saved probably 50% over the cost of putting in the water line and everything in it after it was installed. Thank you.
Thank you, John. Just another comment too. I mean, so we've been doing things like mid-year budget adjustments and stuff that, you know, Rachel's brought to our attention to make sure that the council is aware when we do get into a situation where we're going, you know, when we're going to go over budget on a fund, rather than waiting till the end of the fiscal year to find it, you know, to find out that, okay, we're over. Over the last, over the last number of years, but I mean, specifically since we've got the new city manager, you've really dug in deep into the finances of the city, which, I mean, we've all seen now how important that is, and where, you know, just understanding on all the intricate, you know, ways these accounts are run. Each one of them is now broken down in our budget workshop to understand, is that account, has it been a winner? Has it been a loser? We look at that, our expenses versus our revenue. The harbor is obviously still a sore subject. And this goes back to some of the actions we've taken, you know, when it comes to our water and our sewer rate, looking at our rate structure, raising rates. We've had some modest mortgage increases. No one likes new taxes. No one likes more taxes. No one likes rate heights. I get it. Nobody likes any of that. I don't like it. But the fact is, we have an infrastructure to maintain, and it's our job as the city council and mayor and manager to do what's right for our city and not let it fall apart. If that means that we have to adjust our rate structures, then we have to adjust them. Now, that's not without saying that there are a lot of people that have some creative ideas. I've been getting a number of people coming to me saying that they have ideas. Well, now's the time to bring those ideas. Don't criticize us on the chatterbox or on Facebook if you're not going to bring ideas. Start bringing some ideas so that we can get some of these problems fixed. Every one of these work sessions that we do, things like this, fund balance, these are all solutions to a problem. We knew there was not going to be one smoking gun that was going to fix our financial situation. So it's going to be a lot of small changes. It's going to be some rate structure changes. It's going to be some policy changes. We're just all going to have to keep digging down and working together to get us on financially solvent ground. So that's my 2 cents.
Mr. Mayor, if I may.
Yep, go ahead.
Kudos for the words you just said, Mr. Mayor. I think that's really important. And John, you'll probably remember this. I'm trying to remember, in the harbor, we had a packed room for several meetings about when we were changing, was it the mill rate on the boats? And we went to a flat fee or something like that. And I remember saying to the public that, and at that time, it was only going to be perhaps a $20,000 loss. But I remember saying to the public, I'm only voting yes to this, but you need to understand there may be increases in your mortgage. That expense ended up being more like $40,000 or more a year. So if you add that $40,000 loss, and I can remember the year that happened, John, many years ago. So that's $40,000 a year. So, right, we need to move forward, and thank you, Rachel, for bringing your ideas and your fine tuning to the budget to us, and for us to understand and the public to understand where we're at. And when we have a responsibility to keep the city of Seldovia moving forward. And I appreciate what you're doing. But these changes that we do have consequences. Things that we vote on, they have consequences, and the public needs to understand that. Thank you, Mr. Mayor.
Thank you, Vivian. Anyone else? We have just a minute or two here, and we'll wrap this up and then get ready for our regular council meeting. Okay. No additional comments. Anything else, Rachel, in closing? Okay, we'll go ahead and adjourn the work session. Thank you, everyone, for your comments, thoughts. Yeah, obviously a lot more to come on this, this subject, and throughout the winter is when we started getting back into the next budget cycle. So we'll go ahead and adjourn, give everyone a short break here for 5 minutes, and then we'll start our regular meeting. Thank you.